Good morning and a warm welcome. Holly Shields here for Kalkine TV, reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some key highlights and happenings from yesterday, starting with the US market. Well, growth stocks rallied and cyclical stocks sold off after Austria announced a full lockdown and Germany tightened their COVID-19 restrictions. The market underwent a sharp rotation as traders adjusted for the possibility of a global economic slowdown if other European countries follow suit to contain a fourth wave sweeping the continent. The Nasdaq Composite closed at an all-time high, advancing at 0.4%, while the Dow Jones finished lower for the fourth time in 5 sessions, shedding 0.75%. Meanwhile, the broadest of the major indices, the S&P 500, eased 7 points or 0.14%. Then looking at the sector-wise performance, well, airlines, energy stocks and tourism companies slumped after Austria's decision to reimpose a full lockdown revived memories of last year's freeze in the global economic activity. The Austrian government announced the shutdown as infections hit a new record high. And Chancellor Angela Merkel announced tight restrictions for unvaccinated Germans as well. The Netherlands was already in partial lockdown, and now travel and tourism stocks have borne the brunt of this rotation. With the market, the S&P 500 Airlines Index fell 2.32% as aircraft maker Boeing sank 5.77%. Also, the major cruise lines each lost at least 2%, and Airbnb as well shed 3.87%. Energy stocks sagged almost 4% as oil skidded to a 7-week low. Brent crude settled 2.9% lower, while the US benchmark index fell 3.2%. The stay-at-home group of tech leaders that outperformed last year once more provided a haven. Netflix, Meta, and Apple all advanced. And US financials dropped 1.11% as a rotation into safe haven bonds lowered the yields. Cyclical industries shed 0.53% and materials shed as well 0.16%. Bond proxies were mixed, utilities up and the rest down. The global money go-round is set to slow down this week as Wall Street winds down towards and then closes for Thursday's Thanksgiving holiday. Trading volumes historically decline on Wednesday as traders head home for the holidays. Many do not return for a truncated session on Black Friday when the NYSE and Nasdaq close at 1 p.m. Also, the dollar rose on Friday as investors sought safe havens, following Austria saying it'll be the first country in Western Europe to reimpose a full lockdown amid surging COVID-19 infections, and Germany saying it could follow suit. The euro was sent lower, and the dollar index, which tracks the greenback against a basket of 6 major currencies, was up 0.489%, close to 16-month highs hit on Wednesday. For the week, the dollar was up as well, around 1%. Well, it's time now for a short break, but stay tuned because around the corner I'll be back with the European and Asian market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Welcome back, I'm Holly and you're watching the Global Markets Roundup. The MSCI World Equity Index, which tracks shares in 45 nations, fell 0.28%. European stocks ended in the red on Friday, clocking their first weekly decline in 7 weeks on concerns over the economic damage from fresh COVID-19 lockdowns in the region that hampered cyclical sections like banks and automakers. The pan-European STOXX 600 index fell 0.3% after hovering near record highs earlier this session. The index ended the week 0.1% lower as well. Austria's 20-day lockdown announced on Friday threatens to spill over into other countries, facing a fresh spike of COVID-19 cases in Europe as it faces a new wave of infections that have refocused attention on vaccine rollout and sparked protests across the region. Germany, which currently has a higher vaccination rate than the US, just above 67%, is one big focus, with the country also experiencing a record high in COVID-19 cases. Japan's Nikkei share average rose on Friday as chip-making giants tracked their US peers higher and energy shares surged after a rebound in oil prices. The Nikkei extended the morning session gains to end 0.50% higher. And meanwhile, energy was the best performing sector, jumping 1.79%. Japan is reportedly giving serious thought to President Joe Biden's request to release oil reserves, according to Prime Minister Fumio Kishida. The Biden administration on Wednesday asked that Japan, India, and China consider opening up their stockpiles as a part of the global coordinated effort to deal with skyrocketing prices. If this happens, it'll be the first time ever that the country has done so to lower prices. It'll also be illegal, as under Japanese law, they may only tap into stockpiles if there is a natural disaster or a supply crisis, but never to explicitly lower prices. Meanwhile, in China, shares extended gains and ends higher on Friday, thanks to largely a sharp rise in property and logistics shares. At the close, the benchmark Shanghai Composite was up 1.13%, while the blue chip CS1300 index rose 1.1%. In South Korea, shares launched their first weekly gain in 5 on Friday, as broader Asian peers edged up on Friday and amid an investor optimism that the pandemic recovery can weather inflationary pressures. The benchmark Kospi was up 0.80%, and for the week, the index gained 0.075%. Well, that's all for now, but keep watching Kalkine TV for many more such live market updates. Holly Shields signing off.